Assalamualaikum. Welcome to video 10. This is IAS 19 employee benefit. This standard is not there in your financial reporting, but it is there for the SBR students. Okay, and it is a standard which is definitely going to come in your SBR exam since it has not been asked in FR. So, IAS 19 deals with accounting for pensions and other employee benefit. There are two types of pension scheme. One is known as defined contribution pension scheme and the other one is defined benefit pension scheme. First, let us go through the contribution scheme. A defined contribution scheme is where employee is going to pay a fixed amount to a separate entity regarding pension. Employer has no obligation to make any further payment if the fund does not have sufficient assets to pay all their employee benefits. Example 1, where entity is paying a fixed contribution of 5% of the employee's salary into the pension plan each month. So entity has no obligation to make any further payment beyond this 5%. So the monthly salary will be totally 100,000. Okay. So the entity will reckon, if you, let's say the monthly salary is 100,000. If you take 5% of 100,000, which is 5,000. So entity will recognize an expense of 5,000 in their statement of profit and loss. Why expense? Because employer has to pay this to employee. So from the employer's side, it's their expense. For employee, for them, it's an income because they are going to get a salary. But we are talking from the employer's point of view. Okay, they will recognize this as an expense in their statement of profit and loss. Next is defined benefit. The most complex accounting issue is the defined benefit. Okay, and mostly questions on SBR are on this scheme. This is where an employer has an obligation to provide an employee with a specific level of pension on retirement, usually based on a percentage of final salary. So to estimate the fund required, an actuary will have to calculate the contribution that is required so that ensure that the scheme will have enough fund to pay out its liabilities. This involves estimating what may happen in the future, such as the age profile of employees, retirement age, etc. A pension scheme consists of pool of assets, could be cash, investments or shares, and liability for pensions owed to employees when they are at retirement age. So the assets are used to pay out the pension. Okay. Now, you don't need to know how the scheme works. You need to know how to measure and recognize. That's what is going to be asked in your financial statement. First, let us go to the statement of profit and loss. So, in your statement of profit and loss, you will recognize the service cost, the current cost, and the past service cost. Both current and past service cost. This will be given to in the question. You only have to know which place it will be recorded. So, current and past service cost will be recognized in your statement of profit and loss. Also, any gain and loss that arises on curtailment and settlement. What is this curtailment and settlement? We'll see this shortly in some time. Okay, definition of these terms are given. Curtailment, settlement. So any gain from this too will also be recognized in your statement of profit and loss. The next item that goes in your profit and loss is net interest component. Like any liability, interest will be charged. Here also it's like that. Next, statement of financial position. So in your profit and loss, three things goes: current and past service cost, gain and loss on curtailment and settlement, and net interest component. In your statement of financial position, either it's an asset or a liability. Okay, so net scheme asset or liability will be recognized, and assets are measured at fair value, and if it's liability, it will be measured at present value. This you have to remember: assets at fair value, liabilities at present value. And other comprehensive income, remeasurement of your net defined benefit liability or asset. Anything could be remeasured. It could be asset also, it could be net benefit liability also, such as actuarial gain or loss, and return on your plan assets will be recognized in other comprehensive income, and it will never be recognized in P&L, reclassified to P&L later on. Okay, so these three are very important from the point of your SBR exam. Now, definitions. So you have to know some definitions under IS 19, very important. What is current service cost? Current service cost will increase, okay, is the increase in the actual liability. For example, present value of the defined benefit obligation. This will result from your employee service in the current period. And this is a part of the service cost component. Service cost component is divided into two, current and past. What is current? That means currently, what is your expense to service your employees? Okay. Next is past service cost. This also is an increase in your actual liability related to employee service in the previous period, but only arising in the current period. Okay. So past service cost will usually arise because there has been improvement in the benefit to be provided under the plan. So these are the part of the service cost component and will be recognized when the plan amendments occur. That means when you change the plan, past service cost will come. For example, now plan has benefited. There has been improvement in the benefit. And settlement. Settlement occurs when an entity enters into a transaction to eliminate the obligation for part or all of the benefits under a plan. What does it mean? See, whatever the obligation you have will automatically go off if you settle it off. You only have an obligation until the settlement is done. Once the settlement is done, no obligation. But if the settlement is done fully, no obligation. If settlement is done in partly there will be some obligation. Okay. So when you do the settlement, any gain or loss on that settlement is the part of the service cost component. Remember this. Now, next, curtailment. I told you curtailment, amendment. What is curtailment? Curtailment, very important. You might be asked questions on curtailment. Okay. This occurs when an entity is making a material reduction in their number of employees that will be covered by that plan, pension plan. That means they are, let's say, laying off their employees, or they are amending the terms of the plan such that the material element of the future service by the current employees will qualify for or no reduced benefit. That means it, you can say this one synonym for curtailment, you can say reduction of employees that are going to get benefit out of this plan. Either you are reducing it or you are amending the terms of the plan in such a way that now benefit will not go to so many employees. So this may occur if an entity closes a plant and make employees redundant. So you can make it curtailment with redundant, making employees redundant. And any gain or loss on curtailment is part of the service cost component. Okay. Next, net interest. Net interest is applying discount rate to the net liability or asset at the start of the reporting period, not at the end, start. Okay. All this amount you will be given: net interest, past service cost, present service cost, current service cost, everything. The remeasurement component, this is a balancing figure you have to find out. So the remeasurement can result either from increase or decrease in your pension asset or liability. Like any asset or liability, when there is a remeasurement done to fair value, we have some gain or loss, right? Because that change can happen because of actual estimates. See, actuarial is a person who puts a valuation to an amount. It's like an estimation, and they are highly skilled in that. There is a service called actuary service, and it's highly valued, by the way. It's risky but very highly valued if you want to, go later on. But anyway, let's come back to the topic. So if the estimate changes, it will change. So this component is recognized in your other comprehensive income and it will never go to your profit and loss. Now, example 2. The following information relates to a defined benefit pension plan. Let us go. First, present value. See, this is a question, okay? Present value is given. Fair value at the start is given. Then discount rate 4%. Current and past service together is given 30,000. Benefits paid 20,000. Contributions 25. Present value and fair value. So they have given you the present and fair value at the start and at the end. Okay. Now, what are you supposed to do? You have to find out the remeasurement component, the balancing figure from this. Okay. So the financial statements will show the following for the year ended 31st December 2004. Let us go. So this is your solution. This is how it will look like. Remember, in your exam, you will not be told to draw up the entire statement of financial position or profit and loss, only the extracts. So statement of financial position. First, let us find out. You have to first find out asset or liability. How do you do that? See, to get the net liability, just take the closing balance and deduct the opening balance. You see, your opening present value of obligation is 140,000 and closing is 200,000. So 200 minus 120, the balance is your closing net liability, 80,000. Earlier your present value was 140 and close value increased to 200. So it increased by 80,000. So that closing net liability will go in a statement of financial position. Next, statement of profit and loss. Service cost component 30,000. Net interest component will also go. How are you going to get the net interest component? On your asset. So fair value of planned assets. Fair value of planned asset was 80 in the beginning and 120. Sorry. Net interest component you have to find in the opening balance. Closing balance will not. So that is simply, okay, your present value of obligation 140, fair value of planned asset 80. So the difference 140 minus 80, and you have to apply 4% interest, that is 2,400 will go. Next, other comprehensive income, the remeasurement component, which is calculated below. It's a working. We'll see how 12,600 we got. So first, net obligation brought forward. Net obligation. Net obligation means the difference. Okay. Then service cost component 30. You have to add. Net interest, add. Contributions into plan, deduct. You have to know what to add. With the net obligation, you have to add service cost and net interest cost. Why it's net obligation? Because your present value of obligation is more than your planned assets. So you see, you can net off your asset and liability. One thing in as IAS 19 is you can net off your asset and liability. So the opening balance of your asset and liability. Liability is more. Liability is 140, asset is 80. So 140 minus 80 is 60,000. The difference. Okay. So 60,000 brought forward balance. Net obligation, because obligation is more. Present value is more than fair value. Liability is more than asset. That's why it's net obligation. Otherwise, it would have been net asset. You understand? Service cost you will add. Net interest you will add. Contribution you will deduct. Okay. And remeasurement component is a balancing figure because you have been given the carried forward balance. So how? Simply take your present value at 31st December and fair value at 31st December. Just take the difference. Here also present value is more. 200 minus 120. Difference is 80,000. Okay. So it's a net obligation. So remeasurement component is simply the balancing figure, which will go in your other comprehensive income. Knowing this much is enough for IAS 19. These are the 5 questions you have to do from your exam kit questions. ICOMA, DigiWire, Hudson, Columbia, and Symbol. Thank you for watching, and I shall see you in the next standard, which is IAS 20, which is government grant and government assistance, applicable for both FR and SBR students. Now it's your job to do questions on IAS 19. Okay, because definitely you will be tested on IAS 19. It's a question which has a chance of coming 100%. Okay, 100%. Thank you.